So it's tax season now, Jacques.
Yes, tax season is starting, probably in June.
June?
Yeah, only June. You have to have your IRP5s pre-populated first, and that's end of May. And yeah, but it's close. It's close.
But when you say tax season, what do you mean? But I mean, for me, everybody has to hand these annual financial statements in February. January, February.
Your financial statements usually in South Africa, we've got a February year end as a rule.
Yeah.
Companies change according to what their budget plans are, or their seasonal availability of products are. That's year ends, but usually it's end of Feb. And then SARS gives you some time to get all your affairs in order. And they open the filing season usually in June.
Oh, okay. So what you mean when you said the tax season opens up, for you as auditors and accountants, it means when you got to submit your accounts to SARS. Is that what you mean by tax season?
Yeah, the tax season. Yeah.
Oh,
you get a certain amount of time that you can leeway that SARS gives you to prepare your stuff before it becomes compulsory.
Okay, right.
So if you've got a February year end now, say 24, individuals has most probably until the end of November to have all their taxes submitted, depending if you're a provisional taxpayer or not. If you're a company, they usually give you about 12 months leeway to get your affairs in order. But after that, you need to have it in, otherwise they'll probably raise penalties or.
And when you say so you got to get your affairs in order. It sounds like we die.
Yeah, it sounds like getting your estate or your.
We talk about these. I presume we're talking about when you say it, you're talking about the financial statements that have to be prepared.
Yes.
AKA, we're preparing our affairs to submit to when the tax season opens up and says, "Hey, SARS, this is how we look," etc., etc.
Look, probably 80% of all businesses only prepare financial statements for the revenue services. That's the main thing why they prepare their financials for, is to be tax compliant.
Okay. So 80%.
At least probably there's a lot of small businesses that don't use their financials for anything else but to make sure their taxes are in order. Using financial statements can be a much better tool when you do business than just submitting information for SARS. You can.
Oh, yeah.
There's a whole bunch of things that has value to your financials, but people only are interested in what tax they pay most of the time because they're scared of
the taxman.
the taxman, and but yeah, there's a whole other applications to financial statements.
So you said 80%. So 80%.
That's my experience. Yeah. If I ever look at it, if I know why people contact me, can you set up my financials? It's
just for the
purely because SARS has contacted them.
Yeah. So I assume a lot of people just then, when I was running my business, you tend to run it like any other, small businesses. It's like a day-to-day or month-to-month operation. You don't really give a continual hoot about an end of a financial year or whatever it is, because it doesn't mean any different.
You tend to look what's in the bank to measure your success. For the year.
How much income did I get?
Yeah.
What were our expenses and what were left to it? Forget about the rest.
The rest is, it's like.
And then when I got my pants caught down is when you guys, like the accountants, come on the auditors, well, here's all my paperwork. Please just give me a figure. And then you script the hell out of us by telling us, your provisions is worth, you have to pay the taxman so much money. Going, but there's no money in the bank account. How can that be the case?
That's exactly the situation that a lot of business owners do find themselves in.
Yeah,
they don't keep track of what's going on in their business during the year or during a certain period of time.
Yeah, so you said earlier on that that the account, your financial statements are predominantly used for tax purposes. And then you touched on the fact that there is a little bit that some businesses use it for other means. What are those other means that they would use it for, or what would other people call in for it?
Look, I think with the whole grey listing status of South Africa and the banks now being under pressure to perform a lot of FICA verifications, the banks want financial statements to confirm, they call it source of income. Is the company doing a bona fide business? That's one thing. I think that's going to be very relevant. It's already become relevant. I think it's going to be more relevant going forward. But a lot of businesses would like to open credit, lines of credit with suppliers, or they want a bank overdraft from the bank, or they want to go and buy or finance vehicles or equipment. And then your finance houses, your banks, they want to see what the status is of the business. Is it a sound business? Does it have a proper history of profitability? What does the balance sheet look like? Is it a healthy balance sheet? Is it liquid and solvent? There's a lot of applications then that goes into the financial statements that you use. Business owners go through their life cycle, they get older, they want to retire, and then you need to sell your business. Then what's your business worth? How do you value a business if you don't have a history of it? It's like somebody applying for a job. You get a resume or a CV.
Yeah.
And you say to the employer that wants to employ you, well, this is what I've done. It's the same when you sell a business or when you apply for credit and say, well, look, this is my CV of my business. This is what we've done. We responsible business owners, or you go from there. And that's why financial statements is very important, I think, to any owner.
Yeah. So what you're saying is that a financial statements actually tell a story of that business.
Yes, correct.
Because I wouldn't know. Looking at any plumber's business or any other business, looking at it and say, obviously, the iceberg scenario, you only see 10% at the top and 90% is what's sitting underneath and all that's happening.
Correct,
so you only see the 10% at the top and you think that, sure, that looks wonderful and so great and whatever it is.
Yeah.
But the story underneath, it paints a completely different and in a very high level perspective without getting into the nitty gritties. You're saying that your financial statements are the one that tell that specific story.
Yes, that's exactly the thing. If you have a good accounting ethic in your business, you'll have a proper story to tell.
Yeah.
And that helps a lot on a lot of fronts.
Yeah, like you said, when you're going for a loan, obviously I need to tell the story to somebody, but I can also be as somebody walking in there and going, hey, verbally, and a good salesman might tell a different story. So therefore you'll have an independent, I assume, such as yourself, an accountant or an auditor that tells the story on my behalf, that I submit the paperwork.
Yes,
I think financial
the whole accounting, auditing profession is based on ethics, and ethics has got to do with users of financial information need to be able to rely on it, and that's where the term independent comes in. If your wife sets up your financials for you, is the bank going to look at it the same way as somebody that's not related to the business sets it up?
Yeah,
kind of a thing.
We can have a whole debate about professions and
ethics.
Yeah,
we can. There's textbooks written about this.
Yeah. So Is it a requirement that I have to have a set of audited financial statements in a business or audited businesses, or can I have my own accounting system like with my wife? When I submit it to SARS?
Yes, you can. Yes, you can. But you get different levels of what businesses are. You get companies. You used to have CCs. You still have CCs, but you can't really have a new one. And then you've got guys that's independently contracting as one-man businesses.
Yeah.
They don't have a formal structure in a company. And then the company, depending on the size and the shareholding and so on, also dictates whether or not you have to be audited or independently reviewed, or just having a set of financials compiled by an independent accountant. So that's all. That's a lot of in-depth things that you have to go into. If you operate as a sole proprietor, you can, if you have the knowledge and you have the experience to set up your own financials, you can. You don't have to use a professional to do that, as long as what you're doing makes sense.
Yeah. So, Ben, and I would also assume that I mean, you mentioned about if you've got shareholders, like the PIRB, which is a non-profit organization. Not that it has shareholders, but it has a constituency that it has to report to, and therefore, as such, because it's not your own business, insofar as you are a trustee looking on behalf, therefore you have to get an independent to tell that story.
Yeah.
You can't blow your own
You're
horn
using
because
somebody else's money or funds to run a non-profit organization based on a budget that has been given to the members or the trustees, or depends on how you look at the board. And somebody needs to have a look and say, well, you guys, you did what you were told to do. This is your mandate. You did perform accordingly.
Mm-hmm. And I presume it's exactly the same way as that you said earlier, that your financial institutes look at your financial accounts to tell the story of the business, and therefore I can loan money to you, depending on that story. It would be better to have an independent telling that story, because if the bank manager says, well, who set up your financials statements, and you said it was your wife who's sitting next to you trying to get this $1 million out of this, or 2 million rand from the other guy, is going to go up.
It's going to be difficult to convince them of the accuracy of the figures.
So let's get a little bit, explain to me what makes up these financial statements. What is the in-depth?
Look, in a business that is governed by a framework and accounting policies, and that will usually be your companies or your CCs, and so a trust, if the trust is a business trust, but that's very seldom that somebody like a plumbing company will use a trust as a business. It will be either PTY Limited or a CC for that matter, or a sole proprietor. You'll have a balance sheet, an income statement, cash flow, and then notes that supports all the figures in those three main statements.
Okay. Right.
They kind of interrelate to each other. You have to have one to be able to support the other one. They can be standalones, but they might not make sense to somebody if you just show them one set of.
Yeah. So when I started, obviously as a entrepreneur in business years ago, I must admit, when I was studying, I failed accounting. We said, I remember sitting next to the guy doing our rewrite. I said, what the hell are we doing this accounting stuff for? Because, we were studying construction management. I said to him, you know what? When are we ever going to use this accounting stuff in our life before? And nowadays it's
part of life.
It's part of life. It's not even, as you go up the chain. And you know what the reality is, that, and I'm digressing a bit slightly, is that, even in your own life, you should have a a set of financials
You have
because
to have
it ascertains what your one for
you have to understand the way it works.
it tells a story of your finances as an individual.
As
you know,
well,
you
yeah.
own a house. How much do you owe? You own a car. How much do you owe on that specific thing? And then I know we're going to
What
get
can
into
you
it.
spend? What
Yes,
can't
what you can't spend, and
yeah.
then exactly how much are you worth to leave, as part of your inheritance or whatever it is at the end of the day. So
Your
it's
fees.
really, and I always used to, for me, after I got over the fact that, it's part of business, you have to get into it, and it took me a bit of time to understand the different sets of accounts, and I'm still learning them, but it's not as difficult as you think it is. If you just sit down and you think about, you said the balance sheet, the cash flow statement, and the income statement, the three most important. And what they've literally did, and in my own terminology, is that the financial gurus over years and years and years, it just dumbed it down to those basic documents, which then you can look at them. They're independent of each other, but together they can paint a picture of that specific business.
Exactly. That's how it works, But those three sets of statements have obviously as roots where they come from. They come from a cash book and transactions that goes into a general ledger, and then goes into a trial balance, and that goes into a framework. And it produces the financial statements for you.
Yeah, 100%. I read something a couple of years ago that the financial statements is that it tells a story. Obviously, we said that, but it's a snapshot. You spoke about the trial balance and your set of books that come into it and everything, but it's a snapshot of your business at a point in time. It says, well, let's just take a picture of your business at this particular point, in which in most cases, most businesses are end of Feb. End of Feb, we'll take a snapshot, but your business is continuously trading.
Yes.
And then you use that as a set of, like you said, to go and show the financial manager, or in most cases, in 80% of the time, it's using for tax purposes, so you could submit your financials when you open up the tax season, because this is what your business looked like at that particular point in time.
So your income statement is usually a snapshot of a period, a period of time.
Yeah.
Your balance sheet is at a point in time.
Yes.
And your cash flow is an indication of what did you do with your proceeds and expenses.
Yeah. You'll find that when in the past, when I used to get a set of financials, the only thing, the easiest one was the income statement, because the income statement is like your budget. Got an income, these are all your expenses, and then that's it. The rest of it was like, what the hell is going on here? And then over time, you just, and it's a very, very, for me, once you get into it, it's a very simple document to read. And you talk about the accounting equation. That all your accountants use, that simple accounting equation.
The assets is equals liabilities and owner's equity.
Yeah, 100%. And if you just use that, so it's assets. So the assets, it's owner's equity equals assets less its liabilities. That's correct in saying. So
that's correct, yeah.
So that's the accounting equation, and that's basically what the document is.
Yeah.
It's more so the balance sheet.
The balance sheet
is showing that specific thing.
That gives you it shows you what your company's worth, basically, on cost or on face value.
Correct, 100%. Or how much you as a business owner, what's that word? Owner's equity.
Owner's equity.
What you as the business owner, how much you own of the business.
What's the business value?
Is what the value of the
business,
and therefore it goes on to your personal balance sheet, one for a better word, from that point of view. So if you just look at it, I always dumb it down to the most simplest. If you look at most of us have purchased a vehicle, isn't that so? So in a simple terminology, the vehicle is your asset, which is worth, let's say in simple terms, 100,000 Rand, correct?
Correct.
Then if you loaned money, let's assume you went to the bank and you loaned money for that specific, you got to pay somebody, the bank, back.
You've got a liability.
Yeah, that's called
it.
the liability.
That's
so that liability, let's say you own on the it's not really own on the vehicle because it's the vehicle's cost, isn't that so? But let's just do a simple one. So the vehicle is 100,000. You owe on the vehicle 50,000. You take asset less the liability, the cost of that vehicle leaves you with 50,000, and therefore that's what the owns. Let's put it, owns equity.
That's his equity.
So his equity. So his business is worth 50,000. Now you bring everything of the business into that equation. In other words, you don't necessarily if I'm correct in saying on the balance sheet, you don't go and list every single pencil, pen, whatever
it's a summary.
It's a summary of that specific thing. So it's written as an asset. And we'll get into assets, and I'll ask questions about that some other time. But it just shows it as a line item. And you mentioned notes the other day. That might get into the details.
You have a set of notes that forms or explains all the line items that you have on your balance sheet. Because somebody tells you you've got property, plant and equipment of 100,000. That one line item won't really say, well, what is it? Is it a car? Is it machinery? Is it property? Is it land? The notes will explain that to you.
Correct.
And the amount of detail that the notes go into probably gives you a better understanding of what goes on in the business. I told you that 80% of people use the financials just for the receiver. Is the first thing they do is when you give them their financials, they go to the last page where the tax calculation is. And they look at, this is what I owe. They don't go and have a look at the balance sheet and say, and have a look at what the business is worth or where they've grown or decreased in value. They go to the last page, most of them, and say, this is my tax. Okay. And then they'll go and look, okay, this looks fine on the income statement. They'll have an idea of what they've spent. And then at the end, they'll have a look and say, okay, my company might be worth something. If they're educated in actually understanding what the statements tell them.
And it goes a little bit further than that. And what I learned over the years as a small business owner is that you said 80% just looks at the tax from a tax point of view. Just go to the tax table or how much tax. That's it, end of story. But if you start educating or understanding, and we're not talking. You don't have to understand like auditing level or whatever. Just the basic stuff. You can actually use your balance sheet and your financial statements to your advantage as a business owner.
Yes.
You can see at what point you have to get more assets in, to make use of depreciation, to make use of growing your business, et cetera, et cetera, et cetera.
Exactly.
And I think once you understand that point of view of how you read that specific thing, you can actually now start gearing your business to actually grow itself because you understand your financials, you understand it from that point of view. A lot of people, and I was exactly the same, a lot of people manage their business, and you said it earlier, manage their business from what's in the bank. Whereas a balance sheet doesn't look at it like that. A balance sheet is completely different what money in the bank is. Your balance sheet might be wonderful, but your cash could be poor. And vice versa. You could have wonderful millions and millions in the bank, but your balance sheet can be terrible as well. So it's either or. But once you understand how to look at your balance sheet, you can actually now start using it to your advantage and growing your business.
I think somebody once told me that if you have the three financial statements, your income statement will be history. That's history. It's past. Your balance sheet will probably be vanity. But your cash flow statement is a reality. And, without cash, a business cannot function properly.
Cash is king, as you know.
Cash is king. Well,
And that's the difficult part, is trying to balance it.
It's
I mean, that's the whole
get it to balance.
that's the whole conversation on the side, you know. And I think something that we'll get into, you know, over the series, you know, and more coffee meetings that we can have about that point of view. But you know what I think. So just in summary, you know, what I take away from this is that a set of financials are used to determine what the story of my business is, right? And that story gets submitted to whoever wishes to have insight to that specifically, with 80% of businesses using it only for tax purposes when the tax season opens up, so you can tell the tax man how poorly performing your business is, so I don't have to pay any tax, hopefully, from that. So
but everybody has to submit their taxes, and it is a reality. That is what it is, you know. But you know, we're talking about small businesses here. We're not talking about your listed companies or your public companies. They use it.
Yeah, no, 100%.
There's a difference between the two.
Yeah.
But for a small business environment, small business owners, you know, they can really use their financials to good effect if they know what to do or how to interpret them.
Great. Thanks a lot, Joe. I appreciate it.
Thanks for the coffee.
I think, 100%. We'll meet up next time. And I think when we touch base again, let's delve a little bit deeper into the, you know, that, what did you say? Set of financials are made up of the balance sheet, the cash statement, and the income and expenditure statement. Correct.
That's it.
Cool, bananas.
Thanks
a lot.
Thanks.
Great.